Tax reform triumph. McDonald's announcing that it will expand tuition benefits for employees thanks to President Trump's tax cuts. Joining us now is Joel Schulman, ErShares CEO and Chief Investment Officer. Again, the good news keeps on coming, does it not, Joel, in terms of the tax cuts?
Yeah, that's absolutely right. We have a lot of companies receiving additional cash dollars as a result of this tax benefit. Companies like McDonald's are using it to help retain their employees. And companies like Amazon are putting billions of dollars back in R&D. So we see a lot of companies across the board utilizing these tax benefits.
When is that really going to juice economic growth in this country, and will that help give the market some ballast and keep it moving up?
I think it will. I mean, when we saw it first come out, I mean, certainly, as you know, as you may recall, in January, we had one of the best Januaries on record. And you know, then we had the dip in late February. But I think by year end, we're going to see the markets return to where they were mid-Feb.
Yeah, I think one of the important things to note is that McDonald's had to do something like this because everyone else across the board was raising minimum wage. They were giving benefits, and that goes back to the free market is going to allocate capital to its highest and best uses, including salaries. But I think one of the things going into the future for the stock market this year is that if we look, rates are actually coming down. So the Fed's raising rates, but look at the 10-year Treasury. Look at where the dollar is. This is great for S&P 500 companies because they're going to get earnings benefits from not only taxes, but you're seeing their costs of capital not go up as it was expected. So where do you see the market going at the end of this year? I'm seeing estimates 15% up from here. What's your gauge on how the market's going to fare?
Well, so our Entrepreneur 30 ETF was up 15% by the third week of February. It was the #1 fund out of 870 funds. And we think it's going to return to that level. Right now it's about 7.5%. We see that the market's going back up, 15+%, particularly in tech. So we see that recovering. And really, it's across the board. Small caps, as you may recall, in the month of March, even though the markets were down for large cap and tech was down, small caps were up. They were up 1%. So we see opportunity. Global entrepreneurial companies, the global markets were down 1% year to date. We see them ending up plus 10%.
I want to know Brian, what is it that it's getting in the way of the markets? Because, again, when the downdraft started in early February, it was higher interest rates. It was higher borrowing costs. Lately, it's been a lot of what Washington is up to in terms of the tariffs, the potential, it started with steel and aluminum, and then they rolled out these exemptions. Concerns about a trade war, but then you have, like, Facebook stock getting taken to the outhouse, so to speak. So what is it? And then you have buying of longer-term treasuries in the last week. And so are people worried about economic growth?
This is what I want to ask you, because we've been saying this for a while. It seems like one of the issues here is you get good news. You get good news from McDonald's, Walmart, others, and all these raises. And it seems like you just want to let that breathe. Just let that take its effect and drive growth and drive sentiment. But these policies on tariffs, now we're talking about regulation, they seem to undercut the good news that we led this segment with. Is that the issue? Is it really just as simple as you're not letting the good news breathe?
Yeah, you're absolutely right. We're getting a lot of good news. I mean, when it comes to the tariffs, I think that's good news. When it comes to the tax bill, I think that's good news.
Wait, tariffs are good news? Tariffs are taxes?
No, I'm sorry. Thank you very much. No. Thank you. Taking on China on the tariffs, I think, is good. Yeah. So taking them on. This is a story that's a long time overdue. I mean, when you look at what happened with China and the growth that they've had since 1981, I mean, this is a long time overdue. So taking that on, I think, is good. That it's a problem that's long overdue. And you're right, it's a back and forth. We've had some good news, and then we have, followed by bad news. But generally speaking, the markets are strong, the interest rates are low, inflation is low, and our market's going to recover by year end.
So you touched on China.
Right.
We touched on these markets and the volatility.
Right.
What happens? What are the dangers if these trade discussions fail?
Well, I mean,
And by the way, we should point out, President Trump last night talked about the South Korean trade deal, and he praised it, but then said he might ixnay it. Right. So, you know what? If you didn't ixnay that horrible spending bill, that omnibus spending bill, okay, we'll wait for that, but continue.
Yeah, so when it comes to that trade bill, I mean, we have to remember that 40 years ago, China had a cultural revolution. They depleted their IP. I mean, they had no IP. And in that time period, since 1981, they've gone from a $3.5 billion surplus in the U.S. to the U.S. has a surplus to now we have a $325 billion deficit. deficit. And during that same time period, China, which was the same size as the European market, as the EU, I'm sorry, they're the same size today. They were only 6% of the EU back in 1981. So this is a long time overdue, this problem.
But again, I always talk about you had this massive tax reform which will help business, which is a huge benefit to the economy. You have the tariff issues with steel, aluminum, and then China. But then you have President Trump hammering Amazon on Twitter yesterday. It's on the front page of the Wall Street Journal, although below the fold. But nevertheless, this is a big of enough issue that your major financial publication in the world is writing about it on its front page. Does he just need to keep quiet?
I think so.
We know the issues with Jeff Bezos. He doesn't like Jeff Bezos. Jeff Bezos owns the Washington Post. But nevertheless, again, what are you going to do about it?
Well, I think you leave Amazon alone. I mean, Amazon's a company that's had 30% growth for the last 5 years, constant revenue growth. They've increased job growth from 117,000 to 566,000 employees, and this is a company that's invested $22 billion in R&D.
And people, and just a little note to the president: people like Amazon. Yeah, you can get cheap goods, same day delivery, and by the way, we can get into this, but the stock went up yesterday.
Yeah, it did.
The stock closed up yesterday after this tweet. So
because the White House actually said there's nothing he can do about it, and he's not going to go after him. So there was actually word after he tweeted.
And by the way, the states do collect billions of dollars in sales taxes for
also,
Amazon.
they're playing by the rules.
Course,
fix the rules.
And they're basically helping prop up the U.S. Postal Service.
Exactly.
The Postal Service would be in worse shape if not for Amazon and Amazon, quite frankly.
This is going before the Supreme Court, though. April 17th, they're hearing oral arguments on whether or not they have to tax the states.
Thank you. There you go. Joel, good to see you.
Good
Joel
to see you.
Schulman.